Hello guys, welcome again to a new video. Ray's here. In today's video, I will show you my own strategy for trading breakouts. I will show you from the beginning how I can study the markets from the largest time frames down to the smallest. Understanding that will give you a greater boost in understanding the right areas to enter breakout trades than not doing so. Why? Because I know that most traders, especially at the beginning of learning this strategy, they believe that as soon as the price starts breaking the areas that they have drawn, they can directly enter into a trade. But they are surprised that the price returns on them and hits the stop loss they set. And they are basically got caught on what we call a false breakout, or what we call a fake out. I will teach you how to avoid them in the right way. Therefore, before we begin, I invite you to subscribe to the channel if you are watching me for the first time, or if you have already watched some other videos on the channel. And also don't forget to share the video if you enjoy it and if you got something beneficial from it with a friend who has the same interest in trading as you. It would be a good thing if you start writing some notes. To understand the strategy easily, I will divide it into several initial points. The first one, understanding the general trend of the market. In any market, guys, you have to understand that before trying to execute into any trade, understanding the general trend is the most important thing. Why? Because it simply avoids you from taking trades and decisions against the price wave. Therefore, you will avoid entering into a trade after a breakout against the trend, because you could fall into what I've told you before, the false breakout or fake out. To make it easier, let me show you how I know the general wave or trend in other words. First, we go to the larger time frames, and here I mean the weekly, the daily, and sometimes the monthly. On this example, I'm going to explain on the daily time frame. As you can see, the general trend is currently bullish because we are making higher highs and higher lows. As you can see, we are making, let me show you, we are making higher lows, higher highs, higher lows, higher highs. So what this tells you, guys? This tells you that taking buying opportunities is better than taking sales opportunities. Why? Because in order to avoid fake outs, you have to wait. You have to wait what? You have to wait for a breakout above the resistance in order to buy, because this lines up with the trend direction. Taking trades against the trend direction is like going against the wave, the water wave or the sea waves. So it's better for you to wait for opportunities above the resistance. As an example, as you could see here, okay, taking an opportunity on this area right here after breaking what? After breaking a resistance is lines up with the general trend of the market. As you can see, we are bullish, and taking a trade above this area, it has a higher chance for continuing up, and this is what happened here. As you could see, unlikely taking a trade below a support area against the trend gonna make you cut in a fake out, as you could see right here. In other words, you have to avoid breakouts below the supports area, because that would be the opposite of the market's direction. So after we understand the first point, we move directly to focus on the second point. After we knew the general trend, we will now draw the most important levels from which we can wait for a breakout above the resistance levels, as we said in the first point. For example, we have this chart and this specific levels. As you could see, we have these levels. Before we draw the support and resistance, I have to explain something important, guys. I want you to take notes. The places where support and resistance can be drawn should be specific areas of the larger time frames. The reason for this is that these areas constitute key levels in which the price has faced many rejections, and therefore breaking and closing above these areas will be greater affirmation of the possibility of heading upward in order to fill the other ranges. Without wasting time, let's draw some of the key levels based on the larger time frames, and then try to understand the last point of this video. So as you could see, we are looking at multiple levels. Don't forget that we are in a bullish trend, okay? So what we have said, we said that the levels should be what? Should be retested many times. What we have here a level, as you could see, that has been retested a second time. It has been rejected a second time. So I can basically draw this line here. This is the second idea after understanding that the market is bullish. The second idea is identifying a key level on a higher time frame. We have the 4-hour time frame as an example. So understanding that I should take trades above the resistance, above a resistance in a higher time frame, in a level that has been rejected many times. As you could see, it has been rejected a lot of times. So breaking and closing above this level could be an indication to what to continue up, and understanding that when we look at the left, we look at a clean traffic to what to be filled, and also an idea that this candle could be continuing up to what to fill the previous levels. As you could see here, we can draw them. This is a level that could be filled, and that's what exactly happened. As you can see, we can take our trade on that place. We can put our stop loss below the previous candle low and aim as a first TP to hit the first range, and then if we broke above this, we can focus to hit the other ranges. As you can see, this is what we call targeting the second TP and the third TP. As you could see, this is the idea that I want to tell you next. So I hope you are taking notes from this video. So after we understood the second point, we are left with the last point. Our closure above the key levels depends on two important things. You gotta be writing notes, guys. Write notes. These are gems, okay? You gotta be writing notes. So the first one is how the candle closes, and the second one is the range on the left side of the breakout area, through which targeting and determining the ranges that can be reached is done. To make it clear, focus with me on this example. So as you could see, guys, this candle closed above with a clear size and confirmation for a greater possibility of raising up to the top, because first we follow with the general trend, and secondly, when we look to the left, we will notice a clean path toward filling the upcoming ranges. As you can see, guys, unlike this candle, for example, it closed far above from the breakout level and being at the resistance of a second range, which gives you an indication that taking a trade on this place, it would be not a great idea, because you may face a resistance, as you can see. So taking into consideration that taking a trade should be focusing on seeing a candle closes near to the area where it's broken from. So as I said, guys, all of these points play an important role in making the right decisions in this type of strategy. I will share deeper lessons on this topic and an in-depth understanding of all the possible scenarios during breakout trades. I hope this video has been useful for you. If you have any questions, you can ask them in the comments, or you can DM me on Instagram. You will find all the links on the description. So what I have to say right now, see you again in other videos.